Jim Long with Planning Alternatives. We've been experiencing our fair share of market volatility over the past couple of weeks, certainly more than we've been accustomed to over the last few years of market activity. While we don't know with 100% certainty what's causing this, we wanted to share with you 4 areas that we're focusing on these days. First, U.S. economy. Economic situation's great in the U.S. We've got record corporate earnings, unemployment really low, inflation pretty much under control. The flip side of that, though, is the markets always want to know what's next. There's some concern that maybe 2019, the economic activity might not be as great as it is this year, and that earnings might not be as great, and that's causing some jitters with the markets. Second, interest rate policy. The Federal Reserve has been steadily increasing short-term interest rates because the economy is so good. They're trying to keep the economy from overheating. The negative to that is that some people are thinking that the Federal Reserve is going too far, too fast, and then it might actually stifle economic growth and cause the next recession. Third, trade. We've seen a successful end to the negotiation between the U.S. and Mexico and Canada. Hopefully the U.S. Senate approves this treaty and we can kind of put that one to bed. However, the conflict between the U.S. and China still remains. We've got kind of a breakdown of communication, the threat of tariffs from one side to the other and from the other back. That's causing some concern. The Chinese economy has been slowing somewhat. They're having a little bit of problems with their debt level and with currency, so they may come back to the negotiating table, and let's hope that that situation can get resolved quickly. Finally, midterm elections. Political climate is crazy. Everybody knows, regardless of whatever side of the aisle that you're on, this political climate is very challenging right now and causing a lot of angst. The market doesn't like uncertainty, and it doesn't like not knowing what's happening in the future. The good news, though, is once this election is over with and we have a direction of who's in control and who's in charge, history shows us that the time after midterm elections is actually pretty good for markets. Let's hope that trend continues. I think I'd like to end on something positive. A win for everybody is that no matter what happens on November 6th, all these crazy political ads are going to come to an end, and that's a win for us all. Thanks for listening.